This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everybody, live from the Bloomberg Businessweek studios in New York. I'm Tim Stenovec, joined by Isabelle Lee from the Bloomberg News cross-asset team. It is Monday, August 11th, 2025, and it is Bloomberg Businessweek Daily. Isabelle, how are you?
I'm excited to be here. A great day to start the week. Markets are really just edging higher. Edging higher.
We're kind of hovering around all-time highs. We're going to have more from Charlie Pellet in just a minute. I should note, Carol Massar is off today. She is back later this week. We're going around the world on Bloomberg Businessweek over the next 60 minutes. We're going to start with China and what it means for Nvidia, for AMD, and for the U.S. government for these companies to share their China revenue with the U.S.
And we're going to the Middle East. The quote, all or nothing strategy to end the Israel-Hamas war. Our Middle East geoeconomics lead joins us from Geneva.
And to Russia and Ukraine. The former British trade official Ed Price is back with us in the studio. He's going to share his view on why he argues that America is aiding and abetting Russia. All that and more coming up over the next 60 minutes right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Welcome back, Tim. We have got the Dow, the S&P, NASDAQ now in the red. Wall Street refraining from making big bets ahead of key inflation data. CPI report coming out tomorrow morning. Stocks wavering near records, but right now S&P is down 4. Drop there of just about 0.1%, 63.84 on the S&P. The Dow just above 44,000 even, lower by 171 points, down 0.4%, while NASDAQ is lower by 12, drop there of 0.1%. Our Mag 7 index up 0.3%, and spot gold right now down $40 the ounce, down 1.2%. President Trump saying imports of gold will not face U.S. tariffs, weighing in after a federal ruling caused chaos and confusion in global bullion markets. In a post on social media on Truth Social, the president said, quote, gold will not be tariffed. Bitcoin right now up 0.9%, 119,460, and West Texas Intermediate crude up 0.1%, 63.95 a barrel on WTI. Micron Technology is raising its fiscal fourth quarter revenue, earnings, gross margin, and operating expense outlook, citing improved pricing. And Nvidia and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the government in a deal to secure export licenses. AMD up 0.5%, Nvidia up 0.1%, Micron surging by 3%. Again, recapping, S&P down 4, down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I appreciate that update, Charlie Pellet. Well, we're going to start with an unusual, if not unprecedented, arrangement for two behemoth tech firms that stands to unnerve U.S. companies and Beijing alike. Nvidia and AMD have agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government in a deal to secure export licenses. President Trump making comments about this morning from the press briefing room.
I deal with Jensen, who's a great guy, and Nvidia. The chip that we're talking about, the H20, it's an old chip. China already has it in a different form, different name, but they have it. Or they have a combination of two will make up for it and even then some. The Blackwell is super duper advanced. I wouldn't make a deal with that, although it's possible I'd make a deal, a somewhat enhanced in a negative way Blackwell. In other words, take 30% to 50% off of it. But that's the latest and the greatest in the world. Nobody has it. They won't have it for 5 years. But the H20 is obsolete. You know, it's one of those things, but it still has a market.
I want to bring in Jordan Klein, Managing Director for Mizuho Securities, where he specializes in the tech sector. He joins us from New York. Jordan, I want to fact check a little bit of what we heard from the president's assessment of the H20 and of Blackwell in just a minute. But first, big picture. You're positive on this development, this revenue share from Chinese sales from AMD and Nvidia. Why is that?
Yeah, well, thanks for having me. I mean, look, in a simple way, I just view something as better than nothing. I mean, I'd rather have 85% of billions of revenue than 100% of nothing. And, you know, I know what kind of investors think is a catalyst for these companies, AMD and Nvidia. And clearly it's higher growth and upward revisions. And, you know, that revenue had to come out of those forecasts and street estimates. And now it can go back in. I get it that people never like when the government's going to take a public company's money, but they're kind of doing that with tariffs already. So I think this is just another way, another form of that opens the door for, I think, a lot more revenue down the road, potentially, as NVIDIA, you know, now can, you know, sell different versions of the chip in the future, hopefully, and the government can kind of take their cut. Who knows what they're going to do with that and how they're going to position it, but I'm sure they'll have a positive take on why they're getting this revenue and what they're going to use it for.
So let's go to what the president said, and I'll read back part of it. He said the H20, he called it it's an old chip. China already has it in a different form with a different name. Is that true?
Well, they have a lot of existing H20s from when they were allowed to purchase them before the government, you know, made it illegal. I'm not sure exactly what he means that they have it in a different form or under a different name. I think most people are aware that chips were probably illegally flowing through back channels into China, or those Chinese companies were gaining access to the computing power in offshore locations. So I wouldn't say that, you know, and it is an older chip. Obviously, it's the Hopper generation. They're on Blackwell. I think the bigger question will be, will they, you know, Trump and the administration allow an upgraded version of H20, like some sort of scaled down Blackwell going forward? The other thing to remember is that I have not heard, nor do we think that the US government's going to allow China to gain access to high bandwidth memory. And that's pretty important when you're training and running these massive AI models, is that you need this high performance DRAM memory, which Micron, Hynix, and Samsung make. And for all intents and purposes, that's still blocked.
Do you think, though, this creates a precedent where companies can pay to play in restricted markets like China? And how do you think moving forward this will shape enforcement?
Well, I think that's kind of what some of the media and the experts were you know, saying when they looked at this, is that it opens the door for more AI relationships that are going to be built around how much do you want to pay the government to allow it, meaning the government is relaxing this control or restriction that was supposed to protect U.S. interests and allowing it if they can get a cut of the money. So in some form, it does seem a little, you know, unfair, or, you know, something that maybe isn't in the best interest of the United States. But at the end of the day, these are the only relationships or agreements that have been set up thus far. And I think the U.S. is going to be very careful to signal more of these type of relationships, meaning I don't think there's just going to be a free-for-all of companies who want to start selling high-end technology into China to sign deals and say, oh, we'll just pay you for this, and then open the door. Like chip equipment companies, I don't think they're going to get approval to sell leading-edge tools into China. If you see that, then all bets are off, meaning the U.S. they're going to allow advanced production tools to go back into China, then I think they can pretty much allow anything. And until I see that, I don't think that's the case.
Is there any transparency on how the government plans to use the proceeds from this 15% share? And do you think this will be reinvested, for instance, in U.S. tech competitiveness?
Well, I don't think the government's even given us great clarity on how they're using the global tariffs, the reciprocal tariffs, right? I mean, they're basically helping it to fund government operations and offset spending, right, and deficits. My sense is they'll come up with something that seems very palatable and acceptable to the public and investors, to say this isn't just money going into the Treasury or the Department of Commerce budget, that we're going to use this to plow back into you know, R&D and investment into U.S. semiconductor technology. But honestly, that remains to be seen. And I think they'll keep their options open as opposed to tying that up into some specific plan right away.
Jordan, from a national security perspective, one of the concerns that the security community had essentially was, okay, well, if the U.S. doesn't give China access to this technology, then it's just going to provide an incentive for the country to invest in their own technology and do this in a way that could actually end up being better than American companies. Is that your view? And if yes, does this prevent them from doing that or slow them down at all? Does it decrease that incentive?
I think that's the key term, decreases that incentive. And I do believe that this is what Jensen Huang at Nvidia, that was his case to be made to President Trump and why we should allow these chips to be sold into China, that this would keep them heavily reliant upon U.S. technology as opposed to going elsewhere or trying to develop it at a faster pace on their own. Nothing's going to stop China from trying to become as independent on semiconductor AI technology going forward because they see the risk in relying heavily on the United States. But it takes a long time. You need the R&D, you need the development tools, and the United States pretty much controls a lot of that. And as a result, I think this is in our best interest for the time being, is that we have more kind of the control or the upper hand at what they get, how fast they get it, as opposed to all of a sudden, them turning around and having better technology at a faster development pace than would have been the case if they didn't have access to this.
Jordan, got to leave it there. Thanks for jumping in this afternoon and joining us at the top of our program. That's Jordan Klein, Managing Director for Mizuho Securities. You can check out Jordan's quoted in quite a few articles on the Bloomberg terminal. You can do that also at Bloomberg.com. Hey, speaking of the terminal, a redhead crossing the Bloomberg terminal. The Federal Reserve's two vice chairs, Michelle Bowman and Philip Jefferson, and Dallas Fed President Lori Logan are under consideration to serve as chair of the central bank when the position opens next year. This according to two administration officials. Once again, a headline, Bessent expands Fed chair search to Bowman, Jefferson, and Logan. Check out that story on the Bloomberg terminal. Well, from China to the Middle East, where Israeli Prime Minister Benjamin Netanyahu defended his plan for a military sweep against the final Hamas strongholds in Gaza, calling it the best available option for recovering hostages while safeguarding his country's long-term security. It's an argument that's met vocal opposition at home and abroad. Dina Esfandiary is Bloomberg Economics Middle East geoeconomics lead. She's also the author of New Order in the Gulf, The Rise of the UAE, and the co-author of Triple Axes, Iran's relations with Russia and China. She joins us from Geneva, Switzerland. Dina, good to have you on the program this afternoon. Is this what it will take to end the war?
In short, probably not. I think the offensive is likely to make things a lot worse. It's going to be very difficult for him to get the hostages back by doing this. The hostages are kept in heavily populated areas where a lot of Palestinians have been forced to move to. And so it's unlikely that this is going to be a low casualty operation. And in fact, in the past, they haven't managed to secure the release of hostages through military action. They've only managed to secure them through diplomacy and conversations with Hamas.
Are there credible diplomatic alternatives being discussed behind the scenes, or is this military push a signal that basically the negotiation track is over?
I think the signal is very much that, but the intention is to reopen the diplomatic track. There is a lot of behind the scenes diplomacy going on right now. The Qataris are getting involved. The Egyptians are getting involved. They're trying to mediate. They're trying to find a solution. And I think Netanyahu is dangling this operation as the threat, basically. Come back to the table. Let's find a solution, or this is what you will face. And in that respect, it might be successful. But generally, under coercion, it's hard to really lead to a fruitful outcome to talks.
Well, speaking of coercion, there's a different type of coercion or pressure being placed on Israel as we speak. Norway's $1.9 trillion wealth fund has sold off its Israeli assets. Here's what the NBIM CEO said. We are taking these measures in a very special conflict situation, describing what's happening in Gaza as a serious humanitarian crisis. The move follows a finance ministry review of the NBIM's holdings in Israel. We also see Germany, which is historically Israel's most important European ally, intending to stop supplying the Netanyahu government with arms for use in Gaza. What exactly will be the state that some of these countries recognize, as several Western countries have pledged to recognize a Palestinian state? And is this pressure going to do anything to have Israel pull back?
So for sure, international pressure on Israel is mounting right now, particularly from the Europeans, even outside of Europe, from the Arab states who all signed on to a UN-led statement last week calling for an end to the war. The recognition of Palestine is coming increasingly from various quarters and various countries. The problem is, at the moment, I don't think that's likely to lead to anything. And that's because for Israel, for the Netanyahu administration in particular, the continuation of this war serves several purposes. The first is, well, they haven't achieved their objective. Hamas is still there, and it hasn't been decimated like it was promised. On top of that, maintaining the war allows Netanyahu to alleviate some of the political pressure that he's under, and allows him to sweep these corruption charges under the rug for as long as the war continues. So there doesn't seem to be much of an incentive for Israel really to end the war right now.
What's your read on the internal political pressure that Netanyahu is facing, from hostage families to the far-right coalition members? And how do you think that's shaping the timing or the framing of this offensive?
He's facing pressure from both sides. He's facing pressure across the political spectrum, and he finds himself in a very difficult position. On the one hand, some of his far-right ministers, who he needs to keep on side in order to maintain the coalition and stay in power, are calling for him to double down, to intensify the offensive. They're saying that his plans that were agreed to last week by the cabinet are not enough. They don't go far enough, and they're calling for a full occupation of Gaza. So he's getting criticism from that end. And then on the other side, he's getting criticism from, as you said, the hostage families that are saying, don't do this because you're putting our family members at risk. For now, what he's doing is kind of towing a middle line. So, putting plans in place to continue this offensive, to expand the offensive, saying that he is going to get the release of the hostages, but both sides are going to be left unhappy. And again, it's really going to leave him in a difficult spot.
Do you have any sense of what kind of military operations Israel is likely to launch if Hamas rejects the terms? And how prepared is the U.S. to support or oppose such a sweep, given especially the civilian risk?
It appears that his plans are quite expansive, and he's at the moment, Netanyahu has asked the IDF, so Israel's military forces, to prepare more extensive and detailed plans for what exactly this offensive would look like, how they would go about it, how they would tackle it. In terms of U.S. support, it doesn't appear to me as though we have a Trump administration that is in any way going to stand in the way of Netanyahu. The only country that really has sway over the Israelis at the moment is the U.S. We talked about other international pressure on Israel, and that pressure is rising, but it's not going to lead anywhere, because at the end of the day, if the United States stands behind Israel, if the United States continues to send weapons to Israel, then ultimately there's really nothing holding it back.
Dina, got to leave it there. Dina Esfandiary, Bloomberg Economics, Middle East Geoeconomics lead. She's also the author and co-author of several books. She joins us from Geneva. Coming up next, we're going to get the latest from Ed Price on his analysis of what's happening with Russia's invasion of Ukraine and the end of that conflict. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all in the red. Stocks right now taking a breather ahead of tomorrow morning's key inflation report. The S&P 500 index down by 7, holding close to a record 63.82. We were trading briefly above 6,400 on the S&P earlier in the day. Right now down 0.1%. The Dow down 199, a decline there of 0.5%. NASDAQ NASDAQ down 20, a drop there of 0.1%. Our Mag 7 index is trading higher by 0.2%. Spot gold right now down $44 the ounce, down 1.3%, and West Texas Intermediate crude oil up by 0.3%. Bitcoin up 1.1% at 119,676 on Bitcoin. Jefferies Financial Group has temporarily tightened employment contracts for its private capital advisory teams to discourage competitors from poaching talent that is in greater demand amid a boom in the secondaries market. Jefferies shares are up now by 0.2%. Two administration officials tell Bloomberg the Federal Reserve's two vice chairs, Michelle Bowman and Philip Jefferson, and Dallas Fed President Lori Logan are under consideration to serve as chair of the central bank when the position opens next year. They say Treasury Secretary Scott Bessent, who is running the search, will interview additional candidates in coming weeks. Again, recapping, stocks lower, S&P down 6, down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks for that update, Charlie. Do appreciate it. President Trump downplayed expectations for his upcoming meeting with Russian leader Vladimir Putin. As he seeks to end the war in Ukraine, he cast it as a feel-out meeting. He said he would confer with Ukrainian and European leaders after the sit-down. The president's effort to moderate expectations for the summit follows Zelensky ruling out Putin's demand for territory that Moscow doesn't control as a precondition for a ceasefire, with the Ukrainian leader Zelensky citing the need for constitutional approval. President Trump on Monday slammed that excuse, adding that he was, quote, a little bothered by it.
The next meeting will be with Zelensky and Putin, or Zelensky and Putin and me. I'll be there if they need, but I want to have a meeting set up between the two leaders. I was a little bothered by the fact that Zelensky was saying, well, I have to get constitutional approval. I mean, he's got approval to go into war and kill everybody, but he needs approval to do a land swap, because there'll be some land swapping going on. I know that through Russia and through conversations with everybody, to the good, for the good of Ukraine. Good stuff, not bad stuff. Also, some bad stuff for both.
That was President Trump earlier today from the briefing room. Back with us is Ed Price. He's non-resident senior fellow at New York University. He's also a former British trade official. He joins us here in the Bloomberg Businessweek studio. And I want to start with the idea of a land swap being good for the good of Ukraine. Is a land swap, that's the president's words, he said that this morning, is, in your view, a land swap with Russia the only way that this war will end?
No, it's not the only way this war will end. And by the way, land swap is a euphemism for conquest. So the fact that
Well, a swap implies that each side is giving up something, or right?
I mean, it implies that, but I'm sure that Russia is going to get more than anything Ukraine is going to be given. And by the way, the land we're talking about is Ukrainian land, back to Crimea in 2014. So the fact that the US president is on television saying he's interested in a land swap is a euphemism. He means allowing Russia to conquer parts of Ukraine.
You also argue that a weakened Russia benefits China more than a strengthened one. How does that align with the idea that Ukraine's victory should be decisive? I mean, is there a contradiction in crushing Russia while containing China?
So you've caught me out in a contradiction very skillfully, and that's a good challenge. Because yes, on the one hand, if the West fights Russia and defeats Russia on the European plane, in the long run, that's going to empower Beijing, it's going to empower China, because they won't have a competitor in Eurasia. On the other hand, if you let Russia back into the tent, as it were, and give them something in Ukraine, you've undermined Western values such that the leaders in Beijing can turn around and say, well, look, why don't we just take Taiwan, because nobody has any principles. So yes, when I make the argument that we should fight Russia and Ukraine, I then immediately contradict myself about the long run effect of that. But I think that's because, in essence, Kissinger made the biggest mistake in world history and decided to bring China into the tent before it was a democracy.
I want to go back to what you said. You answered my previous question with, it's one way the war could end. What's another way the war could end?
Well, I mean, if
and that was a land swap that you were referring to.
Yeah, so I mean, a land swap would pause the war. It wouldn't end the war, because Russia would retool, and they've moved their economy to a long-term war footing. Another way would be to beat them, right? It would be to give them the sufficient long-range weapons in 2022. I mean, we've been talking about this for years now, and I've always made the same argument, which is like, if we just give them the kit, give the Ukrainians the kit, let them finish the job, they can get Russia out of Europe. But again, this is...
Doesn't seem like there's U.S. appetite for that.
There's none. And I think we know why there was none under Biden, because he and Jake Sullivan were worried about Russian nuclear saber rattling, which I think was a mistake. We have nukes too, by the way. But under Trump, it's a bit more of a mystery. Like, why does Trump treat Putin so kindly? Why does Trump treat Putin so well? And it's not entirely clear to me, other than perhaps trying to bring Russia on board, like I say.
And you describe this moment as offering Putin, quote, peer status that he hasn't earned yet. So what, in your view, would have been a more appropriate U.S. stance towards China, especially at this stage of the war?
So I think a more appropriate stance, if you're going to meet Vladimir Putin, you do it on neutral ground. You show that you're not happy about it, right? You make the right diplomatic noises that this guy is engaged in an illegal war. You don't invite him to Alaska, which, by the way, has bad juju, because if we remember, Alaska, it used to be Russian, and it's a bit of a flex on Putin's part to be able to get over to Alaska like that. But look, I mean, people like me would say you don't do it at all, and that we are far past the point of diplomacy.
How far past the point are we?
I don't believe that.
Look, we obviously can't go back in time, but ask that question with the question about, is there any way to salvage that?
I mean, that's another way of asking, I think, like, how far into this war are we? How long will this war continue?
Well, we thought 3.5 years ago would be 2 weeks or 1 week or 5 days.
Yes. And I guess another point would be, what is this war? Is this war a wider regional confrontation? If so, does giving Putin what he wants now something that will stop that trend or continue it? I would argue continue it. And so, but look, it's very difficult for analysts, because on the one hand, we have the example of appeasement in the 1930s, and the clear lesson of that is you should actually fight the bad guys. And on the other hand, we have the very clear lesson from the Cuban Missile Crisis, and the very clear lesson of that is maybe you should talk to the Russians. So we're kind of flying in the dark here, because I make one argument, which is very hawkish, and some very sensible people, including the administration, make exactly the opposite argument.
You also mention a, quote, American right-wing obsession with post-democratic Russia. Do you think that this ideological admiration is truly driving policy, or is it more a fringe narrative that's maybe being overstated?
It's a bit weird, right? It's difficult to tell to what extent the alt-right, so-called, in American politics is literal, and to what extent they're actually just saying things that they think will get airtime, or saying things that they think are policies, sensible policies that they need to dress up in a sort of sexier language. I tend to take people seriously when they say things, right? As I get older, I realize that kind of works as a rule of thumb. And when the alt-right says, look, we're in a late stage republic, or we want to be post-democratic, or we don't actually believe that people should vote, my ears prick and I think, okay, maybe that's true, right? I don't know why, I don't know what the benefit is to saying that unless you believe it.
Let's pause on this for a second, because we're getting some breaking news. CNBC reporting is that President Trump has extended the China tariff truce for 90 days. The current deadline was set to expire tomorrow, August 12th. You just let out a little bit of a laugh. You're smiling.
I giggled. It's not professional. Taco, baby. You see,
that's what this is?
It's pathetic.
Why?
It's pathetic. I mean, the guy says, here's my red line. This is the date that something's going to happen. This is absolutely written in stone. Turns out it's written in sand. And it just makes us look silly. And if he is going to go and meet Putin on Friday in Alaska, do you think Putin's not watching that and thinking this guy has said something and then immediately caved again? I mean, it's not. I laugh because I laugh in despair. And American statecraft is all the worse for it.
But you're saying this is not good for the credibility of the United States. Perhaps the president or someone else would argue, we just need more time to get these deals done. These are complicated things. Look at the trade deals that happened with China during the first administration. Those took years. They were a phased-in approach. It makes sense that it will take more time.
Well, I mean, you're talking to a former trade official who didn't used to have wrinkles, right? I mean, they do take time.
You're looking good.
Thanks, that's the makeup team, Bloomberg makeup team. Yeah, but they should just say that then, shouldn't they? They should say this stuff takes a long time. They shouldn't say in 2 weeks' time, we're going to cure cancer and find unicorns. I think it demeans the United States. And he's actually put us in a lose-lose position. Either we go ahead and shoot ourselves in the foot on the economy, or we reverse course and look silly. And by the way, the economy's doing okay, right? I mean, inflation's around 2%.
We're speaking with Ed Price. He's non-resident senior fellow at New York University, also a former British trade official.
So you mentioned the meeting. What strategic upside do you see for the U.S., even symbolically, in engaging with Russia? Any headlines you're expecting or takeaways?
I expect it to be a failure because Putin is structurally determined to defeat and conquer Ukraine. And if anyone can't see that or understand that, I think they're either woefully stupid, I'll say it, or they're willfully ignorant. Now, it might be that in the very long term, there is a rational U.S. reason strategically for bringing Russia closer to the West because of this forecast of a long-run conflict with China. So that might make some sense. But this is another very difficult position, because if we do get to the point where we rehabilitate Russia after this brutal war, we are undermining our soft power because we're saying it's okay to do that kind of thing, right?
Well, is there a risk too, Ed, that we see Russia continue to move into mainland Europe if the U.S. essentially says a land swap is a way to end this war? Yes, you can have this land because you have used military aggression against it. What's to say they wouldn't do that with Poland?
Well, so Poland is actually a very serious military power. And I think that if you attacked Poland, you might get an even worse response, an even worse, bloodier nose than you did in Ukraine if you're Russia. But if it wasn't for D-Day, the Russians would be in Paris today, right? They have a structural reason not to have a functioning European Union, not to have functioning Western democratic economies anywhere near them, and they're going to continue pushing.
Hey, I just want to change subjects. We have 1 minute left with you. Yep. We're getting a question from a listener viewer right now who has a question for you about tariff theory, because you're a former trade official. The president has essentially said that academics have gotten this wrong, that economists have gotten wrong. Do you agree with that? Is it too early to tell if academics have this wrong? Just about 45 seconds.
President Trump's argument is that we neoclassical economists have it wrong because there is a bank account somewhere that's filling up with money. He is engaged in linear extrapolation. He thinks that will continue forever. It won't. At some point, demand will shift, supply will shift. You can't have revenue from tariffs in perpetuity.
There is a bank account filling up, though, with tariffs right now. Billions of dollars have flown into it.
But billions of dollars are nothing, right? I mean, compared to the trillions of dollars in debt, I mean, it's 36 point something going up and up and up. And the idea that you're going to introduce these tariffs and make money forever at the same time as saying we're trying to cut off trade is completely silly.
Ed Price, thanks for coming in. Always good to see you. Ed Price is non-resident senior fellow at NYU. He's also a former British trade official. Coming up next, the founder, chairman, president, and CEO of the publicly traded Inspire Medical Systems. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red with the Dow, the S&P, NASDAQ. They're all trading lower right now, looking at a 3-point drop on the S&P 500 index, down under 0.1%. Dow Jones Industrial Average lower by 173, 44,002 on the Dow, down 0.4%. NASDAQ right now down under 0.1%. We've got the 10-year at 4.27%, the 2-year ahead of the CPI tomorrow morning, 3.75%. Gold down $41 the ounce, down 1.2%. And West Texas Intermediate crude up 0.4%, 64.15 for a barrel of WTI. President Trump has signed an executive order extending the U.S.-China tariff truce for another 90 days. That, according to CNBC, citing a White House official. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. Well, shares of the $2.3 billion market cap med tech company Inspire Medical Systems have been whipsawing today. The company announced early today a $200 million share buyback. Shares, though, last week fell more than 30% on Tuesday. It was the day after the company announced that it would cut its revenue guidance for the full year. It missed the average analyst estimate. We've got back with us Tim Herbert. He's founder, chairman, president, and CEO of Inspire Medical Systems. It's a maker of mask-free treatments for obstructive sleep apnea. He joins us from Florida. Tim, good to see you again. Welcome back to Bloomberg Businessweek. When you joined us back in May, this was a $4.5 billion market cap company. Shares down close to 60% so far this year. Back in May, though, you just reiterated your full-year revenue guidance and raised your EPS guidance. What happened over the last few months that led you to cut over this most recent quarter?
Absolutely. Well, thank you for having me back. I think that what we're excited about is in that time frame, we're launching our 5th generation system. We're very excited about the Inspire 5 system coming out and the improvements it has for patients, for our healthcare providers, and as well as for our operations. We did do a full launch in the May timeframe, and as we rolled through that, the launch taking a little bit longer than we expected. We had a good quarter in the second quarter, but because the launch is taking longer, we did need to adjust our revenue guidance down 4% from the midpoint as we come into the third quarter.
Okay, why is the launch taking longer? And then very briefly after you answer that, just remind everybody what the medical technology is at Inspire that allows you to implant these devices for people who have obstructive sleep apnea.
Well, let's start there. I think most people are familiar with CPAP, or continuous positive airway pressure, where you wear a mask, but a lot of people just aren't able to benefit from that. So what Inspire is, we developed a technology that works inside your body, and it's a neural stimulator that sits just underneath your skin, and it stimulates a muscle in the tongue to hold your airway open while you sleep at night, thereby preventing your obstructive sleep apnea, which affects over 30 million people in the United States. So there's a great need for Inspire. We received FDA approval in the year 2014 and have been developing improvements to the system, and most recently in May, just announced the launch of the Inspire 5 system. So very excited about the clinical evidence that we've seen with our new device, with the acceptance from the healthcare providers. And once we were able to get the full launch out there and the product available at all of our centers that we're going to target for here in the third quarter, I think that we'll be able to really help a lot of people.
Tim, are these devices, do they have batteries in them?
Yes, we do have a battery similar to another neural stimulator, similar to a cardiac pacemaker, and our battery lasts 11 years. So once you receive the therapy, you'll continue on 11 years later when the battery becomes depleted. It's this very simple procedure to replace the Inspire 5 device with the most current generation device at the time that you receive your replacement.
How much of the revenue shortfall is due to internal execution versus external factors, like provider hesitation or patient access, or even just pushback from payers?
I think in the second quarter, we achieved expectations, but as we reset our revenue guidelines into the third quarter, we had to back down a little bit. And for the most part, it's patient flow, but it's having centers ready to offer the Inspire 5 device. They're still working on their 4th generation device. So I think with increased awareness and really helping centers get up and running with the Inspire 5 device and complete the transition, that we'll see the return. And we'll be able, again, to help patients receive Inspire therapy.
What are you changing operationally or strategically to really just improve the commercial rollout in the next 6 to 12 months? We have Truist, for instance, saying they braced for a guide cut, but it was bigger than expected. JP Morgan said that it's frustrating to see a negative revision of this magnitude.
Absolutely. And it's frustrating for ourselves, too, that the launch didn't go as well. I think now that we have proper inventory to support a large and broad launch of the Inspire 5 system. Now we need to focus on working with individual centers to get them up and running. We have another team that is focused on opening new centers, and we purposely held back on that in the beginning of the year to make sure that we had the Inspire 5 launch ready to go. We are approaching that right now, and now we're going to be opening more and more centers that can offer Inspire therapy. We're going to be training additional surgeons and training some surgeons who were reluctant to do the Inspire procedure because the placement of a sensing lead in the intercostal muscles. And we think that with Inspire 5, we really simplify the procedure, and we're working hard to excite them to get those surgeons back up and running. And then just execution within our own centers to be able to have them ready to take care of patients with the 5th generation. And those centers that have converted over to Inspire 5 have already shown a 20% growth in patient implants year over year in the first half of the year. So we're very confident in our technology, confident in that the healthcare system is going to be able to handle the new technology and increase utilization of Inspire going forward.
We're speaking right now with Tim Herbert, founder, chairman, president, and CEO of Inspire Medical Systems, the publicly traded $2.3 billion market cap med tech company that creates the device for people who have sleep apnea.
So, Tim, in light of the guidance cut, how should investors think about your full year expectations now? Are they conservative enough, or should we be expecting more adjustments coming down the line?
Well, when we adjusted our revenue guidance, we took our revenue guidance down 4% from our midpoint. We're still expecting revenues in the range of $900 to $910 million. So that's an increase of 11, 12, 13% from the prior year, 2024. So we're still focused on our growth, really focused on patient outcomes and taking care of reductions in the severity of their sleep apnea, and making Inspire 5 broadly available. So it's up to us to really execute and gain the confidence back from our investors. But I think with the strong patient outcomes that we've shown with Inspire 5, and the fact that we're so lightly penetrated in our target market, still limited to about 5% of our target market has been achieved to date. So we have a great opportunity in front of us, and it's really up to us to execute and complete the launch and make the therapy available to patients.
Let's talk a little bit about this market and the total addressable market. When you were speaking earlier in this interview, you mentioned something that really piqued my interest, and it's the idea that maybe this device is not for everybody with obstructive sleep apnea. Is it only for those who have tried CPAP machines and they don't work, or is this a replacement for people who use CPAP machines right now for obstructive sleep apnea?
Well, I think CPAP therapy has been a gold standard for years, but the challenge is you do have an external apparatus that you wear, and it's difficult for people to get full benefit with the device. And so it's known that a great percentage of the patients, as much as 50%, are just unable to benefit from that therapy. And it's very important that patients with moderate to severe sleep apnea take care of their obstructive sleep apnea, because there's many causal effects from untreated sleep apnea, such as hypertension, cardiovascular disease, atrial fibrillation, diabetes, and unfortunately early mortality. So there's a great need to improve not only the quality of life that patients receive with a good night's sleep, but to address the comorbidities that could be affected by untreated. So Inspire is designed to be a therapy for those patients who are unable to benefit from CPAP. And so it's not for everybody, but we know a significant portion of the population that has been diagnosed just is not being properly treated today. And that's the target market that Inspire is going after.
We have around 1 minute left, but in general, I'm curious if this stumble has changed how you think about your product piping, timing, capital allocation, or even just your general strategy when it comes to really future launches and developing your product pipeline.
Well, I think we certainly learn as we develop new technologies. We've developed technologies in the past. In fact, we're on our 5th generation technology. The key is the clinical evidence that we're seeing, the acceptance by the healthcare providers really gives us confidence that this 5th generation system is really going to help a lot of patients. We know that we have a lot of work to do to regain investors' trust, and we're up to the challenge. We have a long history receiving approval from the FDA back in the year 2014 and have treating over 100,000 patients, but we're just getting started. We know that we're very early on in our market penetration. We're very confident in our patient outcomes, and we're committed to our patients and committed to our stakeholders, and we're leaning in to have a successful launch of 5 and many years of growth in front of us.
Are you committed to staying independent, or would you be open to being acquired by a larger company?
Well, our focus is to remain independent. Our focus is to dedicate our resources and our capital to continue to develop great technology to really help patients drive patient outcomes. And so we're going to keep leaning in to keep driving that growth.
Tim, always appreciate you taking the time and joining us on Bloomberg Businessweek Daily. Tim Herbert, founder, chairman, president, and CEO of Inspire Medical Systems. Well, that stock certainly won on the move today. So too are some big names in equity strategy. The latest, Christopher Harvey, head of equity strategy for Wells Fargo Securities, has left the firm after 12 years. That story by Bloomberg News equities reporter Alexandra Semenova, as well as Bloomberg News cross-asset reporter Isabelle Lee. Alex and Isabelle join me here in the studio. Alex, I'll start with you. Who is he? Big surprise that he's out at Wells Fargo? Because this is just the latest in a number of moves that we've seen in the industry over the last few weeks.
Yeah, it is quite a surprise given that he has had a 12-year tenure at Wells Fargo. He is the head of U.S. equity strategy there, Christopher Harvey. Most recently, he was known as one of the most bullish voices in equities on Wall Street, having an S&P 500 forecast for the end of the year of 7,007. Right now, he's just after John Stoltzfus over at Oppenheimer. So one of the bullish strategists, most bullish strategists still. So very interesting that he's leaving. It's not quite clear yet where he is going, but there have been a lot of moves in this area among strategists. We had Jonathan Golub also moving to Seaport Research last week, and this is pretty significant. Right now we have Oh-Sung Kwon replacing Christopher Harvey. He is quite young, I think one of the youngest equity strategists on the street right now.
It's so weird that I'm asking Isabelle a question. She's also the co-host today. Is there something about this time of year where people moves are happening? Because Alex just mentioned like half a dozen names.
I'm not sure if it's really a time of the year.
Did bonuses just hit and everybody goes?
It must have been. They probably hit around March.
Okay.
And people start looking to make some changes.
But I think Alex has covered this really well. It just also speaks to how tough predicting where the S&P 500 will go throughout this whole year.
Wait, the crystal ball doesn't work all the time?
It doesn't work all the time.
Well, it's barely been working at all lately.
But Chris Harvey
doesn't ever work. Let's be honest.
No.
Like it never works consistently for the same person.
It works if you want to hear.
Somebody's always closest, somebody's always right.
Yes.
But it's a different person every year.
Yeah.
It works if it's in your favor, obviously.
Yeah.
Exactly.
And it's fun. But Alex covered all the strategists, and Chris Harvey has been one of those who really held firm in his beliefs. So he predicted the S&P 500 will close at 7,007 this year, and he held firm even amid the volatility when everyone was revising lower. And Alex really covered that well, and so he's one of those who really has conviction.
Yeah,
but it works really well. That's worked really well right now. Like he has. Yes. At least recently, a really good track record.
Yeah, I mean, sticking to your guns and staying firm in your conviction looks like a really good strategy for him, because 7,000, during April looked like a really silly call, especially as a lot of his colleagues on Wall Street were capitulating, were downgrading their outlook for U.S. equities, and ultimately they had to U-turn and change course, and he looked right. He really betted on the rally in big tech specifically. He said that his bull case wasn't contingent on what happens with tariffs or the economy, but on the enormous strength of AI, and obviously that was right.
I mean, we're just shy of 6,400 on the S&P 500 right now, Alex. What are the latest updates to the end of the year number as we get fully into the third quarter of the year?
Yeah, they've been kind of all over the place. They range to as high as 7,100. I think the lower ones fall into the 5,000. So there really is some divergence in views. Some people think that the tariffs will catch up to the economy and corporate earnings, but a lot of people think that we can keep riding this momentum. I would say the overarching view right now is some near-term volatility, given September is just a historically terrible month for stocks. I think over the last 25 years, it's been down about 1.5% on average. But in general, then you kind of, that paves the way for a fourth quarter rally. We usually do see strength into the end of the year, so we could keep going higher. A lot of people think that the expectation for rate cuts, strong earnings, AI will keep moving us.
The Santa Claus rally is how we call it back home in the Philippines.
We're already talking about the end of the year.
Oh my
Unbelievable.
gosh, I love Christmas.
Better get those vacation requests in for the holidays.
Exactly.
Alex Semenova, Bloomberg News equities reporter. Check out her reporting on the Bloomberg terminal and at Bloomberg.com. Let's take a look at some stocks on the move today. I'm Tim Stenovec with Isabelle Lee, and we're joined by Bloomberg News equities reporter Alexandra Semenova. Alex, what is moving?
Yeah, so I'm looking at Nvidia and AMD. They agreed to pay 15% of their revenues from Chinese AI chip sales to the U.S. government. This is a really unusual deal that threatens to set a precedent for how American companies do business in China. For Nvidia, that share will come from sales of its H20 AI accelerator in China. President Donald Trump said this to reporters earlier today. And for AMD, it will deliver the same share of sales from its MI308 i8 chip. This is according to what sources were telling Bloomberg. Trump said that he originally told Nvidia that it would be 20%, but he negotiated a little deal. Those are his words, not mine. And the arrangement reflects his efforts to engineer a financial payout for America consistently over and over. We've seen that he's been open to negotiations as long as it favors, the U.S.
What about GM? What's going on there?
Yeah, so GM is actually bringing back some of its former employees from its defunct Cruise autonomous vehicle effort. They're trying to develop a new driverless car, but right now they will actually focus on personal cars versus robo-taxis. The plan was detailed to employees in a meeting on August 6th by Sterling Anderson. This is the former Tesla autopilot chief who joined GM earlier this year. I'm kind of excited about this one, guys, because I don't know how to drive a car.
You're such a New Yorker.
I'm such a New Yorker, so I'm very eager
you could
to
like
have
live
driverless
here and
vehicles.
London. I don't know where else
Exactly.
you could live.
Yeah,
definitely
there
nowhere
are
else
very
in the
few
US.
places in the U.S. Where I can live without a car.
I don't have a good segue here. Maybe self-driving cars good for people who use cannabis.
Yeah, that was perfect, Tim.
Cannabis-linked companies.
Yeah, cannabis-linked companies are on a tear today. This is after President Trump said that he was considering reclassifying marijuana as a less dangerous drug, giving the sector a much-needed boost. If you look at some of the companies in this sector, Village Farms International, this is a greenhouse production firm, up as much as 42%, maybe even more right now. I haven't checked. Tilray Brands, Canopy Growth, Aurora Cannabis, all of these stocks soaring double digits. The Wall Street Journal actually first reported on Friday that Trump spoke to cannabis reclassification in a private fundraising event. Cannabis is actually currently labeled as a Schedule I drug, so it's in the same category as things like heroin and LSD, and they just want to make it less serious, I guess.
All right, there it is. Alexandra Semenova, Bloomberg News equities reporter. And for more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. It is Bloomberg Business Week. That is Isabelle Lee from the Bloomberg News Cross Asset team. I'm Tim Stenovec. We've got a great program continuing on Bloomberg Radio. Molly Smith is stopping by in just a minute. If you're sticking on TV, the close